This week was all about rate cut momentum, and that's not just here in the US. We've seen central banks around the world start already to trim rates. And when the number of countries that are doing that gets above about 75% of the global banks, it's often a sign that the economy is slowing, almost a recession sign. And that kind of slowdown usually leads to lower borrowing costs over time. The market is now seeing a September Fed cut as almost a sure thing, and the odds of actually seeing 2 or even 3 cuts before the end of the year is starting to climb back up. And that's good news for buyers and sellers. There is a lot riding on next week's inflation numbers, and we're going to get CPI as well as the PPI report. And those will show us whether price growth is kind of cooling. And if they do come in softer than expected, we should see rates improve. But if they come in hotter, we'll probably see the opposite and definitely a stall out for a little while. But for now, rates are holding near their best levels since April. We don't really have a big push, or at least if we don't get a big push from next week's numbers, we probably won't see much more improvement in the short term. And there's also a leadership shakeup that's going on at the Fed, and that's definitely worth watching. Powell's term is going to end in 2026. And the shortlist for the next Fed chair includes people like Christopher Waller, who's favored by the markets, as well as Steve Moran, who was just appointed temporarily and does have the president's ear. A rate-friendly chair really could help us see improvements sooner in mortgage rates, and the market likes the pick. It can really cause an immediate boost in the market's confidence. So for housing specifically, we did see inventory up about 25% year over year, nationally anyways, but still below pre-pandemic levels. And we are also seeing stories and hearing more about buyers who have been backing out of deals and canceling escrow. Is usually when buyers see surprise costs from inspection reports. Maybe they've got rushed timelines and get cold feet, or maybe they just have uncertainty about the economy as a whole, or even their own job stability. But for agents, setting expectations up front and walking clients through the full cost picture is really more important than ever. And we're happy to help with strategies to improve affordability, to help kind of calm their nerves. I do actually have 2 policy updates to share as well. The new trigger leads law is going to the president's desk, so in about 6 months, buyers shouldn't be getting flooded with unsolicited offers the moment they apply for a mortgage, and that's going to make the pre-approval process a lot less of a pain for buyers. And there's also a proposed tax change that would let parents or grandparents gift up to $50,000 from selling investments toward a first-time home purchase without paying capital gains. And if it passes, it could kind of unlock new opportunities for younger buyers. And speaking of taxes, I do have a really succinct summary of the changes from the recently passed One Big Beautiful Bill for you or your clients. So let me know if you'd like that. But next week's inflation numbers are going to decide if we get a real breakout or if we just kind of move sideways. But either way, I'll be back Friday to share the news.